how to pay off your mortgage faster,
Take advantage of the biweekly option.
tight budgets and stuff like that,
Discuss how much money is coming in.
break the mortgage to take the lower interest rates.
It may make perfectly good sense.
What kind of penalties do they charge?
I would suggest you call your bank.
When might it not make a lot of sense to do that?
It may not make sense.
Hello, folks. Welcome to the Mortgage Den. I'm Nick Silva, principal broker here at Northwood Mortgage Limited. And today with me, Ian Martin, one of our top mortgage agents. Hi, Ian.
Hi, Nick. How are you today?
Not too bad. So today, Ian, we are going to talk about how to pay off your mortgage faster
Okay.
without going broke. How to pay off your mortgage faster and still have a life.
Right.
There's lots of different ways that you can do this, but let's just jump right in.
Okay.
Bi-weekly payments versus monthly payments. Give us your take on that.
The majority of salaried, hourly paid employees in Canada are paid on a biweekly basis. If you can manage it, I would suggest you take advantage of the biweekly option instead of the monthly option because you pay more on the mortgage more times per year. And that effectively at the end of the mortgage life, you pay off the mortgage faster.
Basically, the lenders take your monthly payment, divide it in half, and make that your bi-weekly payment.
Yeah.
And how many bi-weekly payments do we have during the year?
We have 26 biweekly payments per year.
So that equals 13 monthly payments. So without knowing it, you're making one extra monthly payment a year to pay your mortgage off.
Without
fast.
even knowing it correctly.
Now, we hear a lot about this thing called mortgage prepayment privileges. What are those? What's a mortgage prepayment privilege?
Depending on the bank that you work with, they will allow you to do a few things. They will allow you to prepay the mortgage faster. You can increase your payments. You can double up your payments. And again, depending on the bank, each bank differs in terms of what you can do with your options.
So this is like taking any extra money that you may have and paying down the principal over and above your regular mortgage payment.
Yes.
And in this way, it helps reduce the debt in a quicker manner
Correct.
without really costing you a whole lot.
Without you actually having to do much.
Give me some examples of what a prepayment amount would look like.
So again, depending on the bank, a prepayment could be, you could double up your payment, for example. If your biweekly payment is $600, you could double up the payment. If your bank allows you to increase your payment by 10%, 20% per year, you can do that. Most lenders will offer you either 10, 15, or 20% lump sum option at the end of the year as well.
Now, are these privileges cumulative, or if you miss it one year, you can't do it again the next year?
No, you cannot do that. Your mortgage contract will outline what you can do each and every year, but you cannot not take advantage of it for 3 years and then for year 4 and year 5 say, I have an extra $300,000 that I would like to put towards my mortgage. You can't do that.
Another part of the prepayment privilege is increasing your payment. How does that work? And if you increase it, do you have to continue with that higher amount?
So again, it's in your mortgage contract, and if you're unsure, call your bank and ask them for advice. You can increase your payment, yes, but again, it depends on the contract.
And by increasing the payment, what does that do, Ian?
It reduces the principal balance of the mortgage.
Most of us live on tight budgets and stuff like that. You're looking to pay off your mortgage faster. You're looking to save for, retirement, save for your kids' education and stuff like that. How do you manage that? What's the best suggestion do you have for folks on making that kind of decision?
Well, I think you have to actually budget, sit down with your family and discuss how much money is coming in. Find out what your financial goals are for the next year, 2 years. Actually have a plan. If you guys are planning on buying a car, instead of just outright getting a loan, save for it. Save for a decent sized down payment so the loan size will be smaller. But I think you actually need to sit down with your loved ones and actually have a serious conversation in regards to money coming in and see how much of it you want to actually spend and save.
Now, over and above prepayment privileges, if someone is locked into a high rate mortgage, which is coming up for maturity and rates have dropped down, do you recommend that they break the mortgage to take the lower interest rates?
That's a tricky question, Nick. I would advise the client to actually sit down with a mortgage specialist and actually do an application to see what is the best course of action to actually do. It may make perfectly good sense to actually do that, especially in this economy. And again, depending on how much life you have left on the mortgage term. So for example, if you're within, let's say, 3 months of your mortgage renewing, that may be a good time to look at converting your mortgage to a lower term mortgage because there'll be less of a penalty.
What kind of penalties do they charge?
So there's an interest rate differential penalty, depending on the life of the mortgage. There's a 3-month interest penalty. Again, Both these terms that I'm using have to do with, again, any specific bank, any particular bank, and what their penalties and restrictions are when it comes to calculating a penalty if you break the mortgage early.
So our audience should really, know what the penalties that are going to be charged based on their contract.
Again, correct, yes. So my advice would be to review your contract, call your mortgage broker, or even call the bank to find out exactly what the penalty structure would look like.
So you've determined the penalty to break it early because you're going to go for a lower interest rate. Easy calculation to make that kind of determination?
Not easy for a layman. I would suggest you call your bank to get an accurate number of what that number is.
Back to the prepayment options. It's available to you. You mentioned the doubling up of the payments. Some of us are procrastinators like myself, so we spend the money if it's sitting there. What would you recommend? How should people sort of put aside money for these lump sum prepayments?
Put it in a separate account that you can't touch. Buy a GIC, a 1-year GIC, and then on your anniversary date, use those funds towards the lump sum option. But I would recommend you put the funds somewhere else where you can't see it for a while, maybe in a high investment savings account or high interest savings account. My apologies. Maybe that's a good start, but you should have it somewhere where you don't have access to it easily.
When might it not be a good move to break your mortgage to go to a lower interest rate mortgage? When might it not make a lot of sense to do that?
It may not make sense to break the mortgage if the rates are high. If you have a mortgage interest rate now that's at 4.5%, 5%, let's say, for example, the renewing rates right now are at 6%, does it make sense to break the mortgage? No, it doesn't.
Nope. But what if the rate was, 3%? Why might it not make sense to break the mortgage?
So if you have a long term left on the mortgage, even though interest rates are low now, to break that mortgage may cost you a lot of money. And when I say a lot of money, that interest rate differential is quite exorbitant, and you should actually call your bank to find out exactly what those amounts would be to see if it makes sense for you to break the mortgage.
So what you're trying to say is if it costs you more than what you're going to save, then it may not make sense to do so.
Absolutely. But each client is different. So again, I would say consult your mortgage specialist and have a discussion.
A lot of our clients have mortgages, but that's not the only debt that they have. Some of the reasons that they don't pay off their mortgage quicker is because they've got other bills that they're paying, car loans, credit card debts, stuff like that. And most of those other types of lending products have much higher interest rates than mortgages. What would you recommend to someone who has credit card debt, lines of credit debt, car loan debts, where they're spreading their payments out all over the place?
Well, for clients like that, I would seriously consider looking at refinancing their mortgage if it makes sense. And, on the off chance for some clients, if it doesn't make sense and they don't have the ability to repay the loan, I may even consider a proposal. But for the majority of clients, I think today, refinancing would definitely make sense as credit cards, 28% interest. Loans, 6, 7, 8, 9% interest. Lines of credits, 28% interest. Mortgage payments right now are mortgage renewal rates 3.99 to 4.07 or 4.09. So it could make sense to refinance the mortgage.
Ian, I'd like to thank you for coming today. It's been a great discussion with you. I hope a lot of our audience has gotten information that will help them pay off their mortgages quicker.
Great. Thank you, Nick.